Hello everyone, and I thought I would give you a quick update on an outlook for the Australian property market. Of course, there's always major macroeconomic, me being an economist, pressures coming to bear on the prices of property across the nation. First of all, there's the state of the Australian economy. And at the moment, the Australian economy is weakening. It saw first quarter GDP at just 0.1%, and I wouldn't be surprised if we're slipping towards flat or even negative GDP in the second quarter, where we are right now. In fact, so that would mean that we are entering a technical or an actual recession about now is quite a possibility. Now, the other factor that affects Australian property prices in a bigger way than many people really appreciate is global demand for our resources, food especially, but also, of course, for our minerals. And as one of the world's great mining nations, we've been doing very, very well. And I expect the global economy as a whole will remain firm, though Western economies may weaken, and the Chinese economy that everyone's been worried about really has stabilized and has a very strong outlook indeed. However, our relations with China aren't as strong as they once were, and there could be a reduction in exports to China in terms of how much more we increase, but not in absolute terms. In other words, increases in our mineral exports to China could moderate in terms of their growth path, but I expect in absolute numbers we will remain firmly a favored nation to some degree in China for the purchasing of our minerals. So external demand is going to remain firm, though not as accelerating strongly as perhaps it was in the past. The domestic economy is going to be weak, and that brings us to the other big factor, of course, for a property market outlook, and that is interest rates. Now, that's determined by the Reserve Bank of Australia, unfortunately, and I don't have a lot that's good to say about them, but all that matters here in this video is what are they going to do. Now, the Reserve Bank does have a tendency to want to be seen to be tough. That's just the kind of people they are. So if they see firm inflation, and usually it's after the fact, they never saw it ahead of time, as was the case in recent years. But if they see the inflation data ticking higher, and the governor of the Reserve Bank said this last week, she will raise interest rates, even though to most people they seem to be already quite high. The trick here, though, is that by long-term historical standards, Australian interest rates are about normal and maybe even on the low side at the moment. So I do not see interest rates, even though people have experienced, because people respond to recency, frequency, tendency emotionally. And all of that has made people feel as if the Reserve Bank has lifted rates to obscenely high levels, but it hasn't. We're really back towards a range of what is normal in the long term, and we had very cheap interest rates in recent years. So bear that in mind in your property market outlook. The property market historically can certainly climb with interest rates of these levels and even of higher levels. So that isn't the retardation on property prices that many people would expect. What will the RBA do? I think they may well see some further inflation as global energy prices, particularly global crude oil prices, have rebounded sharply in the last week or two and are likely to consolidate at current levels and move higher over the medium to long term, and that maintains an inflationary pressure throughout the world, and that includes in Australia. Of course, the mistake a lot of central banks are making is thinking that adjusting domestic monetary policy could in some way influence the price of global oil markets, which of course it can't. So therefore, there's no need for the RBA to raise rates, and if it does, it's only adding to the pain of mortgage holders, it's adding to the pain of Australian families with no real return in terms of the fight against inflation. And that's why it's highly problematic, the nature of the Reserve Bank at the moment and how it conducts itself. That said, I think the RBA will want to hike rates, but may well not hike rates. As I said, they like to be seen to be a tough organization. That's the people they are. But if the economy is weakening, as I think it will be, that could actually be a good thing for the Australian property market, in that it should forestall any further rate hikes from the RBA. So we could see a scenario of a weakening Australian economy with firm inflation and with the central bank, the Reserve Bank of Australia, that doesn't move. Should we actually have a couple of quarters of negative growth, then of course the RBA will be forced to cut rates to save face regardless of what's going on with inflation. And if you want to understand the Reserve Bank, the first thing they want to do is be seen to be tough and independent. So they love doing what no one would like them to do because they feel like it proves how strong they are and how independent they are, and it's a cause for many of their errors. The second thing they really like to do is maintain face, however. Credibility is so important, and they've hardly got any credibility left. They've lost most of it over recent years, and to me, they lost it in the GFC, but that's a whole nother story. So they know they're very vulnerable. They've just had a major review, etc. The previous governor was basically dismissed. So they know they're in trouble on the credibility front. And that's why they will talk tough on inflation and raising interest rates, but I don't think they actually will raise interest rates. And that, again, is a relief valve for the Australian property market. But as I said, even if they were to hike rates once or twice more, which would be the extreme case, and I don't see those, but that's the most sort of hawkish possibility I could imagine over the next year or 2 years or 3 years, then the Australian property market might stall and might shudder a little bit, but I still think it'll be quite strong. Because the factor that I haven't got to yet is immigration. And we're seeing this into a lot of Western economies around the world, where the economy can be weakening, inflation can be strong, the central bank can be raising rates, and property prices just keep going up. Now, it's for two reasons, really. I'll come back to immigration. The first reason is, if people owned property and a stock portfolio during COVID, coming out of COVID, they have done very well and they're continuing to reinvest in the market. So that is a major driving force, the increase in wealth that has come about since COVID through massive government largesse and overspending and stimulus, etc., and those abnormally low interest rates for a period of time, allowed some people to generate a lot of wealth, which has supported consumer spending, retail sales, and other aggregate data, but that has hidden the fact that for many Australians, life is challenging, to say the least. But that wealth effect is being seen as a reinvestment in the property market and will continue to be for some time. And then you have this now coming through pressure of immigration. To give you an idea, particularly if you're overseas, but this is really about Australian property investors, to give you an idea how extreme Australia's immigration is at the moment, it hasn't been this high since 1893, not 1993, since 1893. We haven't had such extreme immigration numbers to the Australian population and economy. And in fact, our immigration numbers are something like twice that of the United States at the moment. So that puts into perspective just what's going on here in Australia. Now, the Australian leadership has said they're going to wind back immigration. That may be the case, but we've already seen such huge numbers, record numbers coming into the Australian economy, and only at the most 20 to 30% of those people are in a position to buy property now. 70 to 80% of those people are going to be coming to the property market for the first time in Australia over the next 1, 2, 3 years, and even some as far out as 5 years, as they try to build the financial opportunity to enter the property market. So what we have now is a very long pipeline of demand for Australian property. It will, however, be necessary in a slowing economic situation to be very aware and thoughtful about the regional area or even the specific suburb location that you're looking to invest in. And there's all sorts of aspects to tax, etc., that are involved in investing in the Australian property market. With that in mind, I would refer you, and I rarely give references, but I would refer you to the Property Education Club, or propertyclub.com.au, or go to my own website, cliffordbennett.com.au, where you can get a free book on over 100 tips on how to maximize the effectiveness of your investing in the Australian property market. I highly recommend doing that, and I think it would help everyone who is actually looking at investing in property. Now, even if you're a seasoned investor, there may be some things in there from an efficiency or a tax perspective that may be helpful to you. Certainly for people coming to the property market and in the early stages of building their property portfolio, there's a wealth of free information there. And the good thing about the Property Education Club is that, propertyclub.com.au, is that, and don't forget cliffordbennett.com.au, but the good thing about it is there's a wealth of information there that's free, and the Property Club is working with the buyers. So it's very thoughtful about education and making sure that the situation is appropriate for what you're looking to achieve. And remember, they have people on the ground all across Australia who have local knowledge. So I highly recommend that site to you. So overall though, for the Australian property market, I see interest rates as being near historic norms, in fact even still a little bit low. If they do tick higher, it won't be by very much, and they'll still be historically at levels that support higher property prices. The economy is in trouble, and I do see it slowing more than most economists. So maybe I'm wrong, but I do see it slowing more than most economists. But I see immigration, I see the previous wealth effect, those who've done well having done so well, and the immigration effect over the next 1, 2, 3 to 5 years, those pressures continuing to support property prices in Australia regardless of the economic scenario. So I think there's a lot of information there to build on. I hope it helps you. Thanks very much. Clifford Bennett.